Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, hello. Good morning, everyone. Just checking, can you guys hear me? Can you guys hear me? Hello, hello, good morning. Okay. Okay, let me share the screen. Can you guys confirm if you can hear me? All right. Hello, Mr. Professor. Hello, we hear you loud and clear. All right, great. So welcome to a new episode of Chat and Chart. This is the London session open. And this is your host, Saif Qaddoura. I hope you had a great weekend. We woke up today witnessing new all-time highs on gold and silver. It's been, to be honest, been crazy what gold has been doing the past couple of weeks. We're seeing all-time highs almost every day. We'll go through the high impact news calendar, the economic calendar, and then after that we'll go through the charts and see what we have this week in terms of opportunities, in terms of expectations, and we try to align our fundamental analysis with our technical analysis to get the best of the both worlds. Now, all right, so let's start with the economic calendar. Let's see what we have this week. Today we have the durable goods orders from the US, coming from the US. The previous was minus 2.2%, and the forecast is 3.1% positive. So if this is a positive number for the USD. If it comes in as expected or higher, since it's higher than the previous, we expect to see higher volatility or like a higher positivity, in the USD, because this would mean that people are still confident. The consumers in the US are confident in the US economy, and they're placing orders, they're buying, they're moving the economy. So this will be at 5:30 p.m. Dubai time. So that's it for Monday. Tuesday tomorrow we have US President Trump speaks. Probably he will be repeating the same thing about Greenland, about how the US is great, and how they gave Greenland back 500 years ago to Denmark. So yeah, we'll see what new surprises Trump has. Probably he will be talking about that. He might be mentioning the monetary policy, meaning that he will be mentioning the interest rate decisions and how interest rates should be cut. So from knowing Trump, we know that he repeats what he wants over and over again until he has what he wants. But we cannot forecast what he might say. We will have to wait and see. But most probably he will be addressing Greenland, the Greenland plan. And then we have the consumer confidence later tomorrow at 7 p.m. So the previous reading was 89.1. The forecast is an improvement in consumer confidence to 90.1. If this comes as expected or more, this would be positive. If it comes in lower, we might see some negativity on the USD. The USD is like the DXY is dropping pretty bad, and that's why we're seeing all these all-time highs on different things. Even the euro is now at 1.1845. So this reflects the weakness in the USD. We have to wait and see, and then we move to Wednesday. So on Wednesday, Trump speaks again. He likes to speak a lot. So he will be speaking again. And then we have a big week or a big day on Wednesday because we have the interest rate decision coming from Canada and the US. So both interest rate decisions from Canada and the US are expected to have no change. So the interest rates in Canada are now at 2.25%. The forecast is also 2.25%, meaning that the markets are not pricing in any rate cuts. Same with the Fed interest rate decision. We have the previous is 3.75, the current is 3.75, and the forecast is also 3.75, meaning that the markets are not pricing in a rate cut this week. So all of this is not as important as the FOMC statement and the press conference, where people will or journalists will be asking Jerome Powell about the future plans of rate cuts and of how many rate cuts are going to be priced in this year. So far, the markets are pricing in 2 rate cuts in 2026, but that all depends on the inflation numbers and on the jobs market. If the jobs market shows more resilience and more strength, they will keep rates higher to bring inflation down to their 2% target. If not, they might have to cut rates to boost the jobs market, because very recently the 50 points that they cut in the past 3 months were mainly to control, or not to control, to boost the jobs market. Not that inflation is already done or it's solved. It's still above their 2% target. It's around 2.7%, as far as I remember. But so it's still a bit far from their target. But they cut rates not because inflation is solved, but because the jobs market started showing some weakness. All right, so we have Trump's speech, and then we have the interest rate decision from Canada, we have crude oil inventories, and we have the Fed interest rate decision. Now the oil is starting to show some positivity. So if this number comes in lower than the previous, if it comes in at a shortage, it means that demand is outpacing supply, and we might see some positivity. If the opposite happens, if we see more surplus in the inventories, we might see negativity on the oil. So we'll have, like, the most important, or the highlight of the whole week for me is this: the FOMC statement and the press conference, because markets are, as I always tell you guys, markets are forward looking. So they want to see what's the forward guidance, what's the future guidance. They want to see what plans does the Fed have for cutting rates and monetary policy in general. So we need to pay close attention to the markets on Wednesday, because it will be a big day and it will be a volatile day. All right. Hello, let's go. Someone is asking, does he do live trade? You mean me? Yes, I do live trade. I do live trade, yes. Okay. Now we move to Thursday. We only have one data point, which is the initial jobless claims. The previous was 200,000, which is a very good number. It shows resilience in the jobs market. The previous was 200,000 jobless claims. So the forecast is a slight, let's say, drop to 202K, because if more people are claiming to be jobless, that's negative. It's not like if it comes in higher, it means better. No, if it comes in higher, that's negative. So because more people are claiming to be jobless, they're looking for jobs. So if it comes in higher than the forecast or the previous, that's negative. If it comes in lower, that's positive for the jobs market, which means that rates can stay higher for longer to control the inflation progress. Okay. Um, am I holding a trade currently? No. I'm actually flat. I don't have anything yet. Of course, I have one silver trade, which is the like I have physical silver, but like in terms of the markets, I don't have any swing trades running at the moment. The last one I was holding from the past year was a buy on gold from 4010, like 4010, and I closed it around or not around at 4560. So that's it. After that, like I didn't get any clean opportunities to see like or clean risk rewards for me to re-enter the market or re-enter new swings. All right, so we have some questions. Let me answer them before going to Friday. Can you tell us how gold is going to react to Fed cuts? It's rallying like 1,000 pips each day. It keeps going and small retracement and again goes up. Now, I need you to understand something that gold is not only controlled or like it's not affected only by rate cuts or like interest rates. It has many factors affecting it. One of them is central banks are now buying gold very aggressively. So that shows like high demand, while the supply of gold is contracting. So there is more demand for gold than there is supply of gold. Okay, so that's the first reason. The second reason is gold is considered a safe haven. So whenever there's like mess in the world, pardon me, sorry, and whenever there is like geopolitical stress and geopolitical risk, we can see like people usually go away from risky assets and place their money in gold just to protect their money. Okay, so that's what we call a debasement trade. They're debasing themselves from currencies, from USD, from risky assets like stocks, and moving money all to gold. So that's why we're seeing gold going crazy and like rallying 1,000 pips every day. But it's not only the interest rate. Now, if they cut rates, of course, this would affect the dollar negatively, which would mean a positive impact on the gold. Uh, can we confirm that the market has priced in two rate cuts this year? How so? Yes. Now, like there are tools for that, Abby, to confirm that the market is pricing in two rate cuts this year. That's something we call like, it's a tool called the dot plot. So you look at it and you see how the Fed members are expecting interest rates to be, and you see the pricing of the market. So you see that most people or most investors or most economists are expecting, based on on what the Fed has been saying for the past couple of months, they expect that uh, two rate cuts would be sufficient to serve what the Fed wants. But this all obviously can change. Let me tell you a story. Back in 2024, when 2024 started, the markets, or it was it 2024 or 2025? I don't know. I'm not sure, but I think it was 2024. The markets went in and they were expecting 6 or 7 rate cuts on that year, which was 2024. But eventually, what happened? Nothing. They cut 3 times. So, or not even less, 2 times. They cut 2 times. So, like the markets change and the markets are dynamic. So, whatever we get, whatever new inputs we get, this might change the pricing in of the rate cuts. So for now, as of now, because of what we're seeing in the market and the whole situation of tariffs and so on, we see that or the markets are pricing in two rate cuts, but this can change anytime. Like the whole thing can change in a couple of months. Okay. How gold is gonna react? Okay, this we answered this. Thanks. It's another week to go again. We are funding pips. Good morning. Good morning to you, Red Wing. All right. So now let's move to Friday and finish it so that we can move to the charts. On Friday, we have the German GDP and CPI. So the GDP is the growth number. This measures how the economy is expanding or contracting. So the GDP in Germany is expected to improve from the previous 0%, so no growth in the previous quarter. And the forecast is that it has improved in Q4 2025. And we have a 0.2% improvement or growth in the German economy. Now, if it comes in as expected or higher, that would be positive for the euro. If it comes in lower, that would mean negative impact on the euro. Now, same for CPI. The previous was 0%, and the CPI in the eurozone in general, not only in Germany, in the eurozone in general, not only Germany, is somehow controlled. They're at 2%, which is their inflation target. So we expect this number to come in low, maybe like a 0.1% or a 0.2% increase, which I doubt, but this might happen. If it comes in higher than the previous, we might see a positivity on the euro because it means that they need to keep rates higher to keep controlling the inflation. If not, they have room to cut rates to boost the economy and the GDP and the economy growth. After those, we have the PPI coming from the US, which is the Producers Price Index. The previous was 0.2. The forecast is also 0.2, so no change. If it comes in, this is an inflation number. If it comes in higher, it means that this is positive for the dollar because they will keep rates higher to control inflation. If the opposite happens, then we will see negativity on the dollar because it means that they can now cut rates to boost the economy and boost the jobs market. And finally, we have the Chicago PMI. Chicago PMI is a manufacturing index. So the previous is 42.7 points. The forecast is an improvement of 43.3, but we're still below 50, guys. Any PMI number is like the equilibrium point is 50. So if you're above 50, you're expanding. If you're below 50, you're contracting. So even though it's expected to be better than the previous, but it's still below 50, so this is in the contraction territory. So that's not a very good number to have. That's it for Friday. Let me check. So Friday, many news. Yes, many news on Friday. You will skip gold. It's very volatile. That would be actually wise because unless you have like something very clear on like a day trade or something. I always love your analysis. Please come in New York session more. Okay, we'll do. I will make sure to increase my appearances in the New York session. All right. And thank you, by the way. All right, so that's it for the economic calendar. Do you guys have any questions, or should I share the screen or the chart and start discussing the charts? Do you have any questions? So just following up on last week's analysis, everything went to the point. The dollar went down, the euro went up, GBP went up, gold went up, silver went up. So I think we're doing a good job in the London session or London session opens that we do every Monday. Everything happened exactly the way we discussed it. Okay, let's go to the chart. All right, Mr. Abby, noted. All right, moving to the charts. Go here, share. Okay, trying to share my screen. Trying to share my screen. Guys in the backstage, thank you very much. Yes, it's there now. So last week was like bloody for DXY. Look at this drop. Like it was near the 99.5. It dropped and closed at 97.5, which is a big, very, very big drop. And now we're expecting to see, like, since it closed like this, we expect to see more downside. We might go and sweep this liquidity around this area. We might be reaching somewhere around. 1 second, actually. Let's ask Mr. Fibonacci. Mr. Fibonacci, where are you? Okay, so if we break this level, which is the 96.15, we might be moving to 95 and even 94.5, which would mean like a big, like, 1 second, please. Okay, if that happens, that would mean like a big pump in euro against USD, and also GBP, and of course gold and silver. Okay, let me see. I took 3 short positions with gold today. All of it was a loss. Yeah, don't short gold while it's doing an all-time high. Like I think I mentioned this enough times. Whenever something is making all-time highs, don't expect it to reverse. Like just go with the trend. If it's going up, just keep going up with it. Okay. Watching from the Philippines. Hello, hello. I always fear gold. And welcome to everyone from India. All right, so that's it for the weekly chart of the XY. Let's now move to daily and see. Yeah, it's still like respecting this speed line. And we're making lower lows again. So first level is a 96.2, let's say, or yeah, 96.2. If we do that, if we break this level, we're moving down to like so one point away or $1 away, which is from 97.2 to 96.2. If that breaks, we're going to 94, 95, and possibly 94.5, which would have a positive impact on everything against the US dollar. Okay, so that's very, very obvious. Yeah, we were like trending up last week. Since we broke, we retested, and then we continued going down. So all good now. Okay. Yeah, that's very clear that it will continue going down. Now we move to euro. Let's take a look at euro weekly. Reset. Yeah. So yeah, we have. So do you see this wick here, which is 1.1936? This is the equivalent of 94.5 on, or not 94. No, this is equivalent to 96.2 on the DXY. If DXY breaks 96.2, this one will be broken as well, and we will see higher highs, and we might be targeting the 1.21 levels. But if not, if this like couldn't break above this and it got rejected, we might be in for a big move to the downside on euro and a big move to the upside on DXY. But that's too early to decide now, because we have this whole week to to properly read it and properly see what it like, see the behavior and watch the behavior. so that accordingly we can decide if it's going to break or it's going to get rejected from that price level. But so far, trend is your friend, so we expect to keep going up. We go to the daily. Daily as well is very, very bullish on euro and still has a lot of room in terms of momentum. It's not tired, as some people might say. So we still have more room to the upside, but this level is the most important level for euro and the DXY as well. So 1 second, let me add alert. So that's the alert is placed. We're above all moving averages, not only the major ones, no, all of them. So if you remember last week, guys, I told you like we saw this candle, which like closed pretty bullish. I told you I would be waiting for this candle to close. If it closes like this, then we might be seeing a continuation in the upward movement in euro. And this actually happened. It closed like this on Monday, and we saw it going up. And now we cleared this level. Now we have this level in sight. We're going to retest the 1.1920. If it breaks, then euro is continuing its upward movement. All right, so that's it for euro. Now we move to, let's move to GBP USD. Also doing very well, very positive. Reset. All right. So I expected to reach this level, which is 1.4. 1.4 is very positive, is very likely to happen, sorry, because we see like not bad positivity on the GBP USD. Let me check. Yeah, we're still trending up. Let's check the daily. The daily is also trending up. We have higher highs, higher lows. We had this correction and the exact same candle that we saw on euro, which was the engulfing candle here. It closed positive last Monday, and then we saw it continuing the upward movement the last 2 days of the week, which were Thursday and Friday. Okay, so we have the 1.37 level ahead, which is like 45 pips away. If it breaks, we continue to 1.4, which is a great opportunity for those of you who are looking to buy GBP USD. The 4 hours, it's still everything is very bullish. Like a good opportunity would be somewhere around here, like the 1.35. Sometimes markets, when they go up really fast, they correct also very fast. So if you go back to 1.35, this might be a good opportunity to buy with stops below 1.34. Okay, so this is how it would look like. Whereas 1.35, stop is here, and TP is here. So that's a decent risk-reward ratio, 1 to 4.67. I would happily take this trade. So therefore, I'm going to place my alert here just to see. Instead of watching the charts all the time, I just use alerts to tell me what's happening. All right. 1 second, please. That's it for GBP USD. If not, it might just continue going up and we miss this trade. But the only way I'm going to enter this trade is if I see it around 1.35. And if you see, like I placed my alert a little bit above the entry price so that I can see the behavior before placing the trade, because I don't want to just place a pending order without seeing the behavior at that time, because this might take a week to happen. So we'll need to wait and see. 1 All right, that's it for GBPUSD. Now I think it's time, or no, let's save gold for last because it's very obvious. You know what? Bitcoin is has been interesting. Let's take a look. What is it doing? Yeah. So we're still in the safe territory. I have a friend who happens to be a crypto expert. Um, he was asked during a TV interview that what does he think of the Bitcoin in terms of performance? Because like last year it closed down 6% for the year, and he said and I loved his analysis. He said like this is not the most important number. Contrary to what everyone might be thinking, that is closed -6% for the year, he sees it as a very positive close. Why? Because it's 40% above the halving price. So if you guys remember, like 2 years ago, there was a halving, what's it called? A halving event on Bitcoin. So each Bitcoin got cut in half. That's the very basic explanation, because that's not the point. We're not talking about halving now, but it's above the halving price by 40%, which is I think around $64,000 or $60,000. So it's still well above the halving price, which is very positive for Bitcoin. Plus, now we see this stability in Bitcoin, the slower than usual movement, because of one thing, which is that big institutions and big banks and funds are now they have ETFs for Bitcoin. So there's a lot of institutional money there. And whenever you have this much liquidity, it becomes very hard to move Bitcoin as much as it used to move while the retail traders or the retail community was controlling the price, so to speak. So that's why we see this stability and this what's it called? This lack of speed in moving in Bitcoin and lack of volatility, because institutions don't like volatility and they don't like big swings. They like stability more because it makes it easier for them to manage their portfolios and their money and their funds and so on. So Bitcoin is still in the positive territory so far. The only way I would be considering the only way I would be considering Bitcoin to be negative is if we go below 74. As long as you're above 74, we're still in the positive territory long term, of course. I'm not talking about trading, I'm talking about investing and huddling, as the crypto heads might say. All right, so let me ask, I see some questions. Let me see. Hello, Nepal. I shorted because it hits the previous day range. To use the indicators when analyzing and how. I don't use much indicators. I rely mostly on price action, but I have one indicator and a variation of that indicator, which is the moving average. I just use moving averages, and I use different close periods. So I have the 10-day moving average, the 20-day moving average, the 50, 126, and 200. So I have 5 moving averages on my chart, which act as support and resistance to me, instead of just trying to find support and resistance. These or this one indicator with its variations give me a pretty solid or a pretty accurate support and resistance or structure point reading. So that's why I use it. But for trading and long-term forecasting, I definitely don't use indicators at all. I just rely on price action and trends and market cycles. Euro USD suddenly engulfed 4 weeks of downside in one singular week. Any insights on this? Yes, of course. It's the exact opposite of the DXY. The dollar is losing trust because of what Trump is doing now. and people are running away from the US dollar. So the positive or the bullish engulfing on euro was nothing but a bearish engulfing on the XY. So look, do you see this? That's the exact opposite of what happened on euro. So that's the insight I can give you, is that people are losing trust in the USD as a reserve currency, because now, remember in the beginning when I told you central banks are now buying gold because they want a replacement for the US dollar. It does not happen. The replacement does not happen overnight. It takes decades sometimes, but they are actually on it and they're working on it. So that's why we see this drop, especially after the mess Trump made last week or late last week in Davos, and the World Economic Forum. He like straight up threatened the European leaders and told them, like, if it wasn't for the US, um, like, you would guys be still speaking German. We gave you Greenland, we want it back. It was stupid of us to give you Greenland, so and so on. So like this mess that he made caused the dollar to drop and to see less trust. So that's why we saw this negative engulfing or bearish engulfing. Okay, kindly map the GA. Can you share insight about the conference you consider trading gold, or how do you know it will reverse from this point? Okay, now let me tell you like a great insight, in my opinion. Gold is never to be sold. Like if you're trading anything above a day trade, or not even a day trade, if you're not scalping, do not sell gold. The only way that you can sell gold is scalping like a couple of minutes, and it's not very safe to do that. I would go with a trend, and I want alignment between all time frames. So if the daily is bullish, the 4 hours is bullish, the 1 hour is bullish, the 15 minutes is bullish, the 5 minutes is bearish. I would wait for it to become bullish and then buy, instead of just selling for like a day trade or a scalp. So make sure to stay with the trend. That's the secret sauce, honestly. Can you look at S&P and Nasdaq? Yes, sure. How to draw perfect supply and demand levels? There is no such thing as perfect supply and demand levels, because those levels, you observe them and use your common sense. It's not like there's a technical way to do it. Of course, there is a technical way, but you're saying like the perfect supply and demand. Perfect supply and demand is, the way I look at it, is where price started. For example, it hit that level and never went back. That's a very strong demand level. And the supply level is where like the price hit from the upside and dropped and never went back. That's a strong supply level. So you need to use your common sense in understanding what supply and demand are. And to be honest, trading is more like of an art than a science. So it is a science, but the artistic side of trading is very important as well. So you need to have this open mind and like good imagination and good common sense to look at it in a smarter way, so to speak. Okay, so like don't just wait for like 1 + 1 = 2 in trading, because this will get you in trouble. Let me check. Okay, now it's time for S&P and Nasdaq. Then we move back to everyone's favorite, which is gold. Oh my God, silver is just flying. It's 109 now. Okay, we start with Nasdaq. We go to the weekly. Okay, so the weekly candle last week, it broke below and then it closed up as expected last week. We still see positivity, breaking the 25. Yeah, sorry, pardon me. The 25,700 would be a bullish sign, but even on the daily, it's very bullish. Like this is just a correction to this. We don't need this. What's it called? Trend line. Let me see. Did it break here? Yeah, it did. So we might be looking at something like this now. Okay. So this is one, B, C, D, E. Okay, so like I would be a buyer, definitely. I would be a buyer around this area, which is 25,100, with stops below here and targeting new all-time highs. So that's how my trade would look like. That's an engulfing candle. I would take half of it, like the retracement of half of it, and then let's see Mr. Fibonacci. Where is the extension? Where are we headed? We are going to this level, yeah, which makes sense. So 27,100 would be a great exit point, which is a new all-time high. So 2,000 pips trade, but your stop loss would be 360 pips. The risk reward ratio is impressive at around 1 to 5 point something, 1 to 5.5 almost. So yeah, that's a great trade. That would be a great trade. S&P is identical, although like a bit more positive than the Nasdaq. Okay, nothing more to add on S&P, to be honest, because like it's moving in something we call an ending diagonal now, but it doesn't mean that it's going to correct anytime soon. This is a common mistake. 1 second. So some people might consider this a rising wedge. Some people might consider this an ending diagonal, but either way, that's a negative sign, but not just yet. This actually keeps like coming closer and closer to the apex of this wedge, and then starts correcting. But for now, we're headed towards the 7,100 level on the S&P 500. That's actually like today was a great like price. We had a great price to buy around 6,850 with stops below this level. All right, so now I think it's time for everyone's favorite, which is gold. Ready for gold, guys? Look, have you ever seen anything more bullish than this? I doubt. So yeah, the monthly is crazy bullish, not only bullish. The weekly is also very, very bullish. The daily also very, very bullish. It's actually like pretty impressive. Like, where is it getting momentum from? Okay. All right. Then we move to 4 hours, which is also very bullish. So, Abhishek, you were asking me like how would you do, or like no, not was it you who asked me about? How do you know it will reverse from this point? Yeah, it was Abhishek. You asked me like how do you know it would reverse? Like to me, this will not reverse for now. So I will keep buying and buying and buying, and I would actually see the new what's it called slope. Now this is trending faster, it's becoming steeper. So what I would do is anytime it reaches this level, I would happily buy and then continue going up with it. So I wouldn't try to like sell this so it gets to the retracement area. No, I prefer to wait for it to come here and then I'll buy. This will like this is better for my psychology, for my composure. I would stay composed. I would not panic because I'm against the trend. So all of these little details matter in trading. So what I would do is actually wait and buy to be on the safe side. Okay. Isn't gold price now getting dangerous? In what sense, Shishi? Tell me. Okay. Even the hourly is the 15 minutes is very bullish, and we don't have a divergence yet. Even we still don't have a divergence. Okay. 5 minutes. Yeah, we might start seeing some correction, but it will be very, very volatile. So, my advice to you would be to stay on the buy side no matter what, especially like during this period. Okay. All right. Let's take a quick look at silver. Crazy, guys. Do you want to know how much silver went up? Like only from the start of like 1 year ago. Let me go back to okay, let me go to January. Okay. So from January last year till now, till today, this point, it's up to 180%. Imagine, that's crazy. It's up to 180%, 81%. That's crazy. And she asked for lower time frames like 15 minutes or 5 minutes so that I can buy. Yeah, you can buy on lower time frames, but I would make sure that it's aligned with the bigger time frames. Okay. No pullbacks. I mean that the pullbacks are hardly any. Yeah, exactly. So what you do here is you don't buy just like blindly. You just wait for a pullback because eventually there will be one. Prices don't go in a straight line; they go in zigzags. So eventually you will get a pullback. So once you get that pullback, don't assume that it's a correction or like it's a start of a reversal. No, just like buy and keep going with the trend. Okay. I'm not seeing any reverse gear. Yeah, like no pullback. Yep. Yeah, so just to give you some perspective. Now, 109 minus 29 is 80, multiplied by. Okay, so let me give you some perspective on how crazy silver is. If like last January, like January 2025, you bought one lot of silver. You know how much money you would have made today? Can someone answer this? I'm going to end the live stream on this note. So, does anyone know how much money you would have made longing silver 1 year ago from now? One lot, one standard lot of silver. Okay. All right, so let me tell you. One standard lot 1 year ago on silver would have made you $400,000. One standard lot, imagine. So that's how crazy it is now. All right, guys. So I think that's it for today. I hope it was helpful. I hope I answered all your questions. If you have any questions, please, like you know where to find me. Ask me. Reach out on like different channels, Instagram, whatever. Um, I'm very happy that our analysis is doing good week after week. So I hope you guys are making money off of this analysis and you're benefiting from this analysis. So have a great week trading, and don't forget that on Wednesday we have the interest rate decision from the Fed. So this will be what's it called? That would be a very volatile day. Abhishek is saying 25,000. No, 400,000. One standard lot. All right, guys. So take care of yourselves. Good luck trading this week, and I'll see you on the next one. Take care of yourselves, and bye bye.